and welcome to the second part of May June 2023 paper. So today we'll continue with question 16. So I'll start. The total of the sales daybook will be posted to, and we're dealing with the sales daybook, and sales sales is an income, and incomes have credit value. So let's look at the option here. So that definitely A and B are incorrect. C, credit side of the sales account, and this should be the answer. D, credit side of the sales return account. Alright, so the thing is we're dealing with the sales daybook, and the sales daybook deal with credit sales. So that's C. If we were dealing with the sales return daybook, then you could have considered answer D, but this would have been incorrect as well, because it will be on the debit side of sales return. However, we are dealing with a sales daybook, so the answer is the sales account, credit side on the sales account. Question 17, here we have, alright, let me leave this there. A trader received an invoice for $4,000 less 25% trade discount. Subsequently, he returned 1/8 of the goods. What amount would be entered in his returns outward account? So we have this is the amount, this is the list price, and we have a 25% trade discount or bulk discount. The person then returned 1/8 of the goods. So when you're returning the goods, you have to return them at list price. Therefore, you will return at a price from the $4,000 rather than the discounted price. Discounted price would have been $3,000. But when you're returning, you have to return at the list price. Therefore, you find 1/8. 1/8 is 1 divided by 8, or 1/8 times 4,000, and the answer should be 500. Alright, so question 19, we have which of the following accounts are nominal accounts? So we have three main types of account. We have real, nominal, and personal. So nominal deals with income and expenditure, income and expenses basically. Real deal with assets, as in more than likely non-current assets, and then we have personal accounts personal deals with name. So we'll have the receivables and payables. So let's look at these for income and expenses. And the first one we have here, wages and rent. Both of these are expenses, so this should be the answer. But anyway, let's see if there's anything else. Stocks and debtors, no, this will fall under real. Machinery and plant, real. Creditors and fixtures, not nominal. So this here would fall under personal, this here will fall under real. The best answer is A. Alright, so question 20 to 22 will be focused on this. Anyway, let's go. What is the value of the non-current asset? The value of the non-current asset is, so let's have this. Alright, let's put an equal sign here. So we have non-current asset. These are assets that will last for more than one accounting period, or an accounting year. So first we have furniture. Cash at bank, this is current asset. Motor vehicle, non-current. Accounts receivable, you expect people to pay you in a short period of time. Premises is house and land. Alright, so we have 3. Let's come back here. We have 10,000 plus 12,000 plus 20,000, and this will give us 30, 40, 42,000. Yeah, 42,000. Therefore, the answer is C. Which of the following resources could be considered could be considered to be the most permanent asset. Most permanent are the non-current asset that will last the longest period of time, and that there will be premises. Right, so we have trade. Cash bank is definitely current asset. We have furniture and motor vehicle. We tend to believe, or we should believe, that a house and land will last longer than these two. And the last one, which of the following arrangements shows the current asset in order of liquidity? So liquidity, we have two types, right? We have liquidity and permanence. So permanence is basically lasting from the longest period of time to the shortest period of time. Liquidity from the shortest period of time to convert to cash, that is, to the longest period of time. So liquidity, the first thing you look for is cash in hand. And after cash in hand, we have cash in bank, and then we go through. So cash in hand, we have two of them. Cash in hand means the money is already in cash. So we have this here, we have cash in hand, cash in bank, accounts receivable. Now I'm just giving you the order just now. So we have cash in hand, we have cash in bank, then you have prepayment if you had a prepayment. Then we have accounts receivable, and the last one would have been inventory. Here is that. When the proprietor withdraws cash or other assets from a business, what effect does this have on the business's drawings or capital account? So withdrawing goods or any assets from the business basically means that your drawing is increasing, your capital is decreasing. Capital decreasing, you have to get a debit value, and whatever you're withdrawing will have the asset that you're withdrawing will have a credit value because assets are decreasing. So what do we have here? The capital account is increased. Oh no, definitely no. You're taking out money from the business, therefore the capital is decreasing. The capital account is decreased, definitely. The drawing account is decreased. That's not possible. You clearly state that you're withdrawing money, so definitely the drawing account is increasing. Neither the drawings nor the capital account is affected. That is not possible. Alright, let's go question 24. Mr. Smith does not keep proper records. Not good. She began her business with $10,000 in its bank account. She uses her vehicle and billing worth $6,000 and $15,000 respectively as part of her business. Customer owes her $4,000. So all of these items here, the $4,000, the $6,000, $15,000, and $10,000 are all assets. She withdrew $1,500 for personal use and owed creditors $2,000. So let's do some calculation here. So technically, we're gonna add all the assets and we're gonna minus the drawing and minus the liability. So 10,000, 16,000, 20,000, 30,000, 35,000. So assets equal to 25,000 minus 25,000 minus 2,000 and 15. That's going to be 3,500 minus 3,500. So okay, and this would give you 31,500. So the closing capital for this period of time is going to be 31,500. Alright, which of the following outcomes will result when opening inventory of raw materials are added to the net purchase of raw materials? So this here is going to be cost of, raw material available for used. So when you minus the closing inventory, then you'll get the actual raw material that were used for the period of time. Going on to question 26. Working capital of A. The working capital of A. Young and Sons is 15,500 and the value of the current asset is 16,500. What is the total current liability? Total current liability. So use the accounting equation: asset equal capital plus liability. That's what we want here. minus liability. Asset equal what? Asset equal to 16,500. Capital equal to working capital equal to 15,500. And we don't know the liability, but if you look here, there's $1,000 difference, so the liability is going to be $1,000. Right, so basically you get 15,500 plus 1,000 will give you 16,500. 27. An article is subject. An article is subject to a 20% trade discount. Its list price is $600. What is its sales price? So basically, you minus 20% from that, or you multiply this by 0.8. Right, so 600 multiplied by 0.8. This here will give you the actual discounted price, which is the sales price, 6848. So the answer is going to be 480. The discount is 120. The amount you're going to buy it for is 480. The following item 28 refers to the following summary of receipts and payment for the month of March for a non-government organization. Alright, the cash balance at the end of the month is, so let's look at this. Income. Alright, this is not an income, let's look at the income one. Purchase, postage. Alright, income. So we have 550. Have 550 minus 680. 150 plus 80 will give you 230 minus 230, and this will give you 220. Something seems off. 320, sorry. 320. We have 29. P Hat has a manufacturing business. The cost of his raw materials is $1,900. Rates and rents total $2,000, and factory wages amount to $2,500. Alright, he produced 640 units. What is the cost of 1 unit? Cost per unit. So let's go through here. The cost of the raw material is $1,900. Rates and rents. So I would like to assume that these are also part of the overheads, as in factory overhead. And factory wage amount to, this is direct wage. So we add all of those and divide it by 640. So 2,900 or 900, 5,900, and 1,900 plus 2,000 plus 500. This gives you 4,500, 5,500, 6,400. And you divide this by 640 units, and this will give you $10 per unit. Which of the following entries in the 3-column cash book is a contra entry? So basically, contra entry is, well, you can have 2 types of contra entry. You have with sales receivable and accounts receivable and accounts payable, or you have cash in bank. So in this case, we're dealing with cash in bank, means you move money from the cash account to the bank account, or vice versa. So you either debit bank and credit cash, or credit cash and debit bank. So let's see the first one, debit cash, credit bank, and this here is a valid transaction. Debit cash, credit cash does not make sense. You cannot, this is not double entry. Credit cash, credit bank, no. Debit bank, credit bank, no.